Hi friends, welcome to InfoCraze. In today's video, we are going to explore a crucial topic that keeps businesses running smoothly, accounting. This will be a very useful video for freshers who have just taken up the commerce stream and want to master the basic concepts of accounting. Let's start with the basics. So, what exactly is accounting? Well, accounting is the process of recording, summarizing, analyzing, and reporting financial transactions of a business or individual. It's a systematic way to track money coming in and going out of a business. Accounting ensures that financial information is accurate, consistent, and compliant with legal and regulatory standards. It helps in budgeting, financial planning, preparing tax reports, and decision making. Imagine you are a business owner and you want to invest in new equipments. Without accurate accounting records, you would not know whether you could afford it or not. This is why accounting is referred to as the language of business. It communicates the financial health of an organization. More specifically, accounting provides a systematic way to track expenses, assets, liabilities, equity, and revenue, enabling stakeholders to assess the financial performance and position of an entity. Now, we will learn the simplest way to pass accounting entries for financial transactions, meaning which account to be debited and which account to be credited. In order to do that, please note that the expenses and assets are called the normal debit accounts, whereas liabilities, equity, and revenue are called the normal credit accounts. What does that mean? This means whenever the balances of these accounts increase due to financial transactions, normal debit accounts are debited, whereas the normal credit accounts are credited. And the reverse happens in case of any decrease, that is, whenever these accounts decrease due to any financial transaction, normal debit accounts are credited, whereas the normal credit accounts are debited. Now, let's check whether we can pass accounting entries with these rules. Suppose a company buys a computer for Rs 20,000 by making cash payment. In this case, two accounts are affected. First is the computer and the second one is the cash account, both of which are assets. Since assets are normal debit accounts, they will be debited with increase and credited with decrease. In this case, computer account is debited because it is an asset and purchasing it increases the asset balance. Cash account is credited because the payment decreases the cash balance, which is an asset account. Let's take another example. Suppose a company takes long-term loan of Rs 5 lakhs. In this case, two accounts are affected. First is the loan account and the second one is the balance in bank. Bank account is debited because it increases the balance in the bank, which is an asset. Loan account is credited because it represents a liability, that is an obligation to repay the loan. Thus, you need to remember this chart, which can help you to pass journal entries very easily. In case you have any doubt, you may send your queries to me through the comment section. With this, we come to the end of this video. If you find this video useful, please like the same and share it with your friends. Please subscribe to my channel for many more interesting videos in the field of finance, accounts, and costing. Thanks for watching.